This episode is brought to you by Newline by Fifth Third. Drive your fintech forward with the embedded finance platform designed for enterprise fintech and backed by a leading financial institution. Discover how Newline can transform your business at newline53.com. The Fintech Takes podcast is also brought to you by Paddle. Need more revenue, more growth, and more time? Over 5,000 digital businesses trust Paddle as their merchant of record, or MOR. Unlock more revenue, more growth, and more time. Get more at paddle.com. Okay, well, we have a great episode for you today. This is a special guest edition of Fintech Takes featuring the legendary Frank Rotman, Chief Investment Officer at QED. Frank is a returning guest. He's come on the podcast before, and if you've listened to prior episodes with Frank, what you know is he is a very deep, very experienced first principles thinker on all things fintech, financial services, and in some cases just the infusion of technology into human society. So I asked Frank about some of the latest things he's been writing about and posting about. And then we also get into some predictions. Frank's not a big, hey, here are my predictions for 2025 kind of guy. But if you press him a little bit, he will work with you on longer term predictions, because over a longer period of time, I think he and I both believe that you can sort of sketch out where things might be going and what some of the disruptive impacts of technology and consumer behavior change are going to be on the financial services space. So he comes back to refresh a couple of his predictions that he made the last time he was on and talk about some of his theories about just what's happening in the world right now. It was a fascinating, very open-ended conversation, which I can't wait for you to hear. So without further ado, here is Frank Rotman. Hello, and welcome back to the Fintech Takes podcast. My name is Alex Johnson, and I am thrilled to bring you a special guest edition of the Fintech Takes podcast, making a triumphant return visit. One of the people's favorite guests, the founding partner and chief investment officer at QED Investors, Frank Rotman, is here. Frank, thanks for coming back.
Oh, happy to be here.
I am delighted to have you, sir. Last time we chatted, we got way deeper into a whole bunch of areas than I was anticipating, which is always the most fun version of a podcast that you can possibly have. So listeners may recall, if you listened to that last episode, Frank and I spent, I think, most of our time talking about predictions for the future. And we have a very specific model we use for doing predictions and thinking about predictions, which we are going to revisit. But before we get there, Frank, your handle on Twitter, I refuse to call it X, I'm just going to call it Twitter until I die, is Fintech Junkie. And I think one of my favorite things that you do on Twitter is you will lay out sort of larger theories about society and human behavior that are kind of foundational to a lot of the more nitty-gritty stuff that we talk about in fintech week to week. And so I was hoping, if it's okay, to start, before we get to our predictions, to run through a few of those posts that you've put out recently on different facets, I guess, of how society is changing, how human behavior is changing, and kind of get you to lay out your theory for us, just so that maybe as kind of a pretext for our discussion on predictions, we can have a baseline conversation on human behavior and how it's changing. Does that work?
Yeah, I mean, it's a fun topic. Myself included, it's too easy to be in the weeds every day, you know, and worry about the thing that you have to deliver today or tomorrow. But there are bigger changes happening, and I've been writing about them because it's cathartic in a lot of ways to figure out how to frame what I see happening out in the world. And it's gotten a pretty good reception because people are, pulling themselves up from the weeds and thinking about things in a very different way.
Yeah, no, I completely agree. I mean, every time I see, if you guys follow Frank on Twitter, if you don't, you should. But if you follow him on Twitter, you've probably seen these posts I'm talking about, which are usually, I think it's AI generated imagery, if I'm not mistaken, combined with kind of a longer treatise almost on like something that you're seeing and why it might be happening. So let's review a couple of those. The first one I wanted to talk about was your latest one, which was zero-sum society. And you had actually had DM'd me this on Twitter, and we'd exchanged a couple messages about it. But the basic idea was you had a line in there that was essentially talking about the increasing comfort or increasing likelihood of people these days to be playing what you called PvE, player versus everyone type games, regardless of the impact that that game has on the collective. And this idea, which is sort of framed as like zero-sum society or zero-sum way of thinking, I mean, I will say I have noticed just in my own life and my own observations about the world a real increase in zero-sum thinking out there. And so I was very intrigued by your piece. And in it, you laid out some sort of different theories maybe as to why this might be happening. And so before we get into like the impact of that on the economy or on financial services or the stuff that we spend more of our time on week to week, I'd love for you to just lay out this theory broadly about what you've observed and what you think might be happening here.
So there's a piece that I wrote that predates even the zero-sum thinking that I think is the underpinning of just about everything that I'm writing these days. And it's an interesting observation that I call when P win equals zero. And the concept here is that if you're playing a game and you've determined that the probability of winning that game, if you continue to play with the rules that have been outlined, if you believe that your probability of winning is zero, then literally any move that you make from that point forward is actually rational, even though it might appear irrational to people who are just observing that move. So it's just a really interesting framework, to think about what's happening in society. Because, actually living life is a game. Your career is a game. Everything is a game. And a lot of people believe that there are rules that have been outlined for them by the people that came before them, their parents, the institutions, their employers, like they're rules. And they're playing these games. And a lot of people are coming to the conclusion that if they play the game by the rules as written, they've lost. Mm-hmm. So if you think about the traditional game of life and traditional advice, it's, grow up in a family where you're actually cared for and go to school and learn a trade or learn something that you can do better than other people, get a job, save some money, go to college if you want to have higher education or go find a profession, get a house, a family, like all of the traditional things. And when you talk to a lot of people today, they believe that if you actually play that game by the rules as outlined, they're actually not going to win, right? So they go to college, they grow up in a family, they go to college, and they come out of college with hundreds of thousands of dollars worth of debt. And they end up not able to buy a house. And they end up spending most of their paycheck, just barely being able to, subsist. Mm-hmm. And then you get traditional financial people yelling at them, telling them, don't drink that Starbucks because that's what's causing you to have, problems because you're spending on an affordable luxury that you shouldn't, and, if you kind of play this out and people believe that if they just follow the rules, they don't have a life that's that interesting, right? They feel like they're struggling. So when you see people doing what would otherwise be thought of as irrational things, like getting involved in crypto and investing in meme coins, it appears irrational on the surface, but for a lot of people, that might be an outlet where they can press a button, get a lottery ticket, and potentially tomorrow their life is different.
Yeah.
Right. And that's not that irrational if you believe that you've lost the game. Right. So there are a lot of things that people are doing that on the surface appear irrational, but to the people who are playing the game, they've just determined that they have to change the rules. So when we think about the zero-sum society and we think about what's actually happening and people playing these PvE games, person versus everyone, instead of trying to collectively win, they're trying to win for themselves. You have to internalize that, winning a game that revolves around money isn't actually about the purchasing power of the money. It's really about a bunch of other underlying things. It's about security. It's about dignity. It's about control. It's about reducing pressure and anxiety in their lives, right? And if you frame it that way and say, what are people willing to do to get those things? It's a very small concentric circle that starts with themselves and then their family and then people who, are closer to them. They're willing to do a lot right? And some of it is giving up their values. Some of it is playing a game where someone else loses for them to win. But it abstracts everything, when they're playing this game and saying, look, I'm really focused on my own dignity, my own security. And until I have that, I can't give to a broader concentric circle. So again, this PVE, in the piece that I wrote, I outline a lot of the reasons for it, or potential reasons. They're all speculation. But you're seeing it everywhere in society, where people are willing to give up on something that you think they wouldn't be willing to give up on for incremental financial freedom. And again, a lot of it is because the money isn't about purchasing power. It's about many things that are deeper than that.
Yeah, that it's really interesting. So a couple things you hit on that I wanna sort of pull apart for a second. One is, as you said, this expectation of if I play this game by this set of rules, I'm gonna lose, right? And the two parts that I find most fascinating about that are one, what is your definition of losing, right? And I think this kind of ties to this idea of expectations a little bit. And I'm fascinated by this actually because I think that, if you think about what's changed in society over time, I think one thing that is probably a fairly safe assumption is that I think just the march of progress, the advancement of technology, the sort of development of the economy, all of these things, they tend to sort of set our baseline expectation higher and higher, right? And just to give like one example of this that I find kind of fascinating, the question about, I can go to college, I can graduate, I can get a good job, and I can afford to live in the place that I want to live. That's a really fascinating set of assumptions that I think are totally rational on the part of younger consumers today. But it is interesting, I think, in some ways, how different or how elevated those expectations are relative to the past, right? And like to give you an example of this, I mean, it was not that long ago when if you wanted a job that paid a certain amount of money, you had to move, right? And I had one of those jobs, right? I moved from Montana out to Boston for a job, and it was kind of silly. It's an expensive city, and it was kind of a strange experience because, like, the job itself, this is pre-COVID, obviously. The job itself, you could totally do remotely, right? There was nothing about needing to be there in person, but the dominant model of how companies thought about, their workforce and their employees was you have to be in person. They paid a small relocation bonus to help pay for the costs of moving across the country. But like we moved, my wife and I, it wasn't like the best place to live. We were living outside of Boston. There were some nice parts about it, but like it wasn't really our home. It wasn't where we wanted to be. But if I hadn't done that and taken that step, a whole bunch of other opportunities that came to me later wouldn't have been available to me. And, it's funny because when I tell that story, which again is not that old of a story, this was like right before COVID. So it's not like I'm talking about the 1800s here. The people I tell it to who are in their, early 20s, that story strikes them as bizarre. Like, why would you have to move for a job? That's completely unfair. But like, in the moment, it wasn't unfair. It was just kind of the way the world worked. Right. And so one of the things that I think is such a hard thing to disentangle about this sort of, if I play by the set of rules, I'm going to lose, is what are the expectations for winning? And how do those expectations sort of set my understanding about the risks that I'm willing to take, right? Another term I've seen you use before is financial nihilism, right? Which is this idea that like, there is no chance for me to succeed if I sort of do the normal things. So I might as well kind of just YOLO my way into various lottery tickets and just sort of see what happens. And expectations would seem to be a big part of that. And then the other part that I also want to get your take on real quick is I wonder how much of that mental model that I think consumers do increasingly have, I wonder how much of that is supply driven versus demand driven. And in the sense that like, and I'll pick on one example. I think they've actually gotten better about this recently, but sometimes I'll see commercials from Coinbase on TV. And the commercials, Frank, are some of the most depressing commercials I have ever seen in my life. Basically just painting a picture of how the economy and the sort of economic systems that we've set up basically are hopeless for young people to try to navigate. And so and of course, the end sort of conclusion of the piece is
it is their narrative. Yes.
Right. And that's like the whole narrative is like we have to construct this alternate financial system because the system we have is utterly, it's impossible to navigate. You shouldn't even like try. And I don't think that is the entire story, but I do wonder to the extent how that type of sort of supply driven, we want you to think in this way, how much that influences the way that consumers, particularly young consumers, think about the paths they should be trying to navigate.
Yeah, so there's a lot to unpack there. Probably the most important piece of what you're digging into there is really the changing of expectations in society.
Yeah.
Right. Because you can't really just tell people to change their expectations, by large across society and say, look, let's just reduce our standard of living and then everything will be good, or reduce your expectations and then you can win the game. But it is nuanced because there are people who have completely irrational expectations, right? I've talked to a lot of people and given career advice where, you listen to what they want and the only response can be, how does it feel to want? Like their expectations are just so crazy about a 22-year-old wanting status and power in a job and decision-making ability and a lot of income and a lot of freedom to travel. Like there's a point where, that's the life you see people live on TV, or not just on TV. You see them, someone talking about it on the internet, and social media, and you believe that should be you, right? So there's
or you believe that like, I'm sorry to interrupt, you believe that what they showed you as a small slice of their life is representative of all the choices they've ever made and all the parts of their life, which is probably not a good assumption.
That's right. And when you have billions of people in the world, if you actually look at the outliers and they only post the good things that are happening in their life, and they have a lens that they, screen everything through before they let the rest of the world consume it. I mean, it is like a TV show, right? It's scripted at that point, and people will look at that and some people will say that should be me. That's the irrational side of people's expectations. But by and large, like this narrative around financial nihilism and playing the game that's been outlined, it just really is harder for people today. So there's a lot of truth that's behind that. So there's someone who I know, actually a very good friend, a lot younger than me, earlier in his career, but he went to a good college, ended up doing well in school, ended up with a job in a marketing agency, a higher end job, right? Not a hourly job where, it might be more difficult to explain this narrative. But I mean, he's basically low 6-figure income. Now he's in a more expensive city, but in that city, he's struggling to even go out on the weekends and just meet up with friends and date, right? Which would be a pretty rational expectation that if you work hard during the week, you should be able to go out on the weekend, not do anything crazy, but be able to buy a few drinks and go on a date and have a nice meal and not worry about it. And instead, he worries about it, and that tells you that there's something happening, right? And his expectations aren't crazy. It's just his rent is taking up a lot of his money and he has student loans. And it's the classic story of he feels like he played the game the way he was told to. And now it's just really hard. It's not that he won't succeed. He's going to do just fine. But you can imagine living that life and saying, what did I do wrong? Or what could I have done different? Right? Because he's playing the game and it's just really hard. So I think you've got to look at both the expectations that are irrational and what's happening at large. And they are different things. And social media is amplifying a lot of this issue. And there are a lot of people that need to be told, like, get a grip of, your expectations are like out of control. Like that's not what you should expect. But by and large, like life is getting harder to win. So I think there is some truth there.
Yeah, no, I think that's totally fair. And I think the other thing that this kind of outlines, and this ties us back a little bit to financial services and to sort of larger economic issues, is this idea that, and it's hard to study history sometimes and then realize that you're living in an interesting part of history. Like it's not always obvious in the moment, but if you do look at kind of patterns over time, I think one thing you see is there are periods of stability where like the paths that are defined are pretty stable, effective paths for getting where you want to go. And obviously not everyone's going to go down them. Not everyone's going to succeed, but like the paths forward are relatively clear. And then there are moments of, I guess you'd call them like economic dislocation, where the rules are actually being reset, and it's not really clear what the right path is, right? And so, like, to use the kind of classic white collar, go to college, get a good job sort of example, I mean, I think that one is really tough because I have young kids, right? So I think about this a lot. The time period in which you give someone that advice, if it's on the edge of that advice not being good advice anymore, you might end up unknowingly giving really bad advice to someone you care about, saying like, well, this is the path I followed, this is the path my parents followed, so like that's a pretty good track record of time where if you just follow this path it'll be successful. That's what I know, that's what I understand. But if the whole rules of the game are going to change and suddenly that's not the best path to go, you might just have bad timing, right? In a sense. And so I also wonder right now if what we're seeing, and this ties into AI, this ties into the sort of value exchange. You've written about this before, about the value exchange of college, and like, is that a good expected return on investment? There's all of these kind of things where, like, it might just be that at this moment we're on the cusp of a new set of rules and a new playbook being created, where 10 years from now I might be able to give really good advice to my kids, but if I told my kids and they were ready to go to college right now, I might just not be in a position to give them good advice on the path to follow.
Yeah, I mean, this is kind of the oh crap moment when you realize certain things, and some people have this moment, and some people are ignorant, and they're bliss in their ignorance. But I look at myself as an example, and my career and the things that I learned and my personal superpowers. Right. And if I think about it, like, my superpowers are about being able to take very complicated things and learn about them, collapse them to their component atomic pieces and build them back up with frameworks and be able to explain them to people. Like that kind of is me in
that's what you do. Yeah.
Summary. That's what I do. Other superpowers that I've learned over the years, for a while, I was a code monkey, right? I was an exceptional code monkey, but I was a code monkey and I was very, very good at it. And I think about these things as an example and I go, wait a minute, my path, which arguably was a fairly successful path, if I were to give that advice to someone today, it would be the opposite of something that will succeed in the future, because all the AI is going to be able to take over the coding job. So like, learning to code is not something I would recommend for people today. And if I think about like taking complicated things, learning them, breaking them down and building it back up, last I checked, like, Claude is actually better at this than I am, right? And everyone's going to have this in their pocket and be able to have a little version of me, like, they're better than me, in their pocket for $20 a month, right? Like, my path is not going to be the path that's going to, paint a successful career in the future. So to your point, like, there are these dislocations, and I think we're in the middle of one, or the beginning of one, actually, not even the middle of one. And it's going to be very difficult to navigate.
Yeah, no, I completely agree with that. And jumping us to another theory, which I think is actually very related to this. So you had another piece that you wrote that I think the title of it was "You Are Being Programmed." And I think it actually really does tie into what we've been talking about, because there's this idea that, the things we think, or the things that we expect, or the things that we believe are true, obviously there have always been inputs into that process. And those inputs are everything from what you see on the news, to what you learn in school, to what your parents tell you, to what you talk about with your friends. But one new large input, obviously, is technology, computers, smartphones, the internet. And you in this piece gave a really good sort of, I think, framing around, if you think about computers and the way that we used to interact with computers, it was very much, I provide input to the computer, I program the computer, I give the computer instructions, and then it gives me something relatively sort of static and non-dynamic back in return. It tells me the answer, gives me the piece of information, it outputs the piece of code that I'm looking for, whatever the output is. And what you point out in this piece that kind of like really rewired my brain a little bit when I read it, because I haven't really been able to stop thinking about it, is now that process is a two-way process, right? And so we are still providing input and still programming machines and still providing input to how they work. But what we get back from them is algorithmically generated in a lot of cases, right? It is dynamically determined, and it gives us something back that actually is an input for us in terms of how our brain works. And I think social media is probably the example in my personal life where I see the most of this happening. But I'm using Twitter, I'm interacting with the algorithm, and Twitter's become kind of a mess lately. And so in some ways, the algorithms become a lot less subtle. And so it's kind of more obvious to me than it used to be. But like that algorithm is programming me based on the information it gives me, what it sees me do in exchange with that information, how I interact with it. And you don't really realize it. It's subtle. That's kind of the problem. But whenever I unplug from my phone or from social media or from things for a while, I absolutely feel my brain changing and slipping back into a different mode than it used to be. And so talk a little bit about like this we are being programmed idea and kind of what you think some of the implications of it are. Looking to grow your fintech with scalable API-enabled payments? Newline by Fifth Third empowers enterprise companies to accept and process payments seamlessly. Effortlessly launch and scale payment, card, and deposit products directly with Fifth Third Bank. Learn more at newline53.com. Do you need more? More time? More revenue? More growth? Software companies are born global, but the complexity of selling worldwide can be overwhelming. Managing payments, sales tax, fraud, refunds, these things slow you down, but getting them right is essential. That's why over 5,000 digital businesses choose Paddle as their merchant of record, or MOR. More. Complete sales tax compliance globally, multi-currency payments, fraud protection, billing support, all taken care of. With Paddle's MOR model, you get more. More time, more revenue, more growth. Learn more at paddle.com.
Yeah, the piece was written because, not a surprise in the narrative right now, there are many sides to an argument, but basically two polarizing positions about should we be controlling the inputs to training the artificial intelligence, super intelligences that are going to exist in the world.
Yeah.
Who is actually controlling them? What ethics layer are they putting on top of them, et cetera, because these are going to be the teachers of the future, the sources of input that we digest as human beings as almost a source of truth coming back to us. So should there be bias? Should there not be bias? You have Elon Musk and you have what's happening at OpenAI. And there are a lot of different perspectives on who should be training these models and how should they be trained. And you saw some very bad experiments take place at Google about trying to put an ethics layer on top of AI. And you could see like how the outputs were quite different and quite poor, when you were doing that. But there's this big debate going on about like who should be controlling it, because ultimately like that is going to be our source of truth, in the future. And I started thinking about it and I said, wait a minute, like, why are we so focused on AI? I mean, we literally are being programmed every day of our lives outside of AI, right? So the family that you grow up in, the values that you have growing up, do you or do you not have religious beliefs? Are there communities that you're part of? Like, every interaction that we have is really programming. And, if you think about us as carbon-based learning machines, right, we're focused so much on the silicon-based learning machines of computers and about the bias that's going into them, but we're not thinking about the bias that's going into us, based on the people that we interact with, the communities that we're in, how we grow up. I mean, the programming is happening. And, the really sad thing about carbon-based learning machines is that once they're programmed, they're actually very hard to unprogram. Very easy to insert information, very difficult to change that insertion. And even with new fact patterns, once something is ingrained in a carbon-based learning machine, like it's there. And the amount of new information that you would need in order to change it is not what you would think if we were a good learning machine, right? So the problem is, and I think I give this example in the piece that I wrote, like you could have someone on their lunch break just log into TikTok for a little while. And all of a sudden a video shows up that because there's an image on it that is interesting, they stop for a second and they start learning about a new topic that they had never learned about before. It could be political. And that's a lot of what's happening right now, is that there's something political that you've never heard of before, something that you didn't even know was going on in the world. And you get this very biased perspective based on this one video that you stop on for a fraction of a second. And the next thing you know, the algorithm serves you up like 500 more of that exact perspective, because it's like, hey, they consume this content. Like, we're not going to give, an unbiased view of all the different versions of this so that they can learn as a learning machine. I'm going to give them the thing that they stopped on, and I'm going to give them more of it. And by the end of the lunch break, this person who just happened to stop on a video might end up angry about something that they didn't even know anything about before they started their lunch break, right? They could be all worked up about a political situation. They could be all worked up about something going on in life. And it was something that they weren't even aware of 30 minutes earlier. And then undoing that is nearly impossible, right? Because you've now implanted, almost like Inception, like you've implanted this carbon-based machine, like a perspective that they've now adopted as their own, because there haven't been enough countervailing facts on the other side. It's not about actually learning in perspective. A lot of these videos are designed to implant a very specific message. It's just like any documentary you watch. There's a perspective from the documentary maker where they want you to leave feeling something. That's programming, right? And the problem is with the algorithms as they exist today, you can get programmed in 30-second increments, right? And it doesn't take many 30-second reinforcements of something before you believe it's your own.
No, that's exactly right. And the thing I was trying to think about a little bit is, like, going back to your point about carbon-based learning machines, it's like our brains are sort of designed to see patterns, even when patterns don't easily exist, or that even when they're not there necessarily, right? So, like, humans are really great pattern recognition machines, but if you sort of think almost from an evolutionary perspective, like why we're so good at that, it's because we had to take in a lot of disparate information and then very quickly make decisions about, go this way, go that way. And if you go left instead of going right, you're going to get eaten by a saber-toothed tiger. So, like, your brain really needs to, like, pick out the thing that's going to, like, help you nudge you away from the path that the saber-toothed tiger's on and down the safe path. And so, like, your brain just gets really good at that. And that's, thousands and thousands and thousands of years of evolution. I think that the interesting thing, and again, I'll reference my kids just as an example of this, because I find oftentimes I'm much more able to understand what's happening in the world when I see the effect of the world on my kids rather than on me. That's sort of probably another thing about human beings. But the thing that's interesting is we have these little glass squares that we carry around, and we sort of perceive all of the world through these glass squares. And what the algorithm is doing is giving us, like, a supercharged version of, like, pre-matched patterns that we then see, and our human brains are stupid and go, oh, hey, a really great pattern that I should just, like, immediately click into and make sense. And so in some ways it's like there's an extra layer of filtering and sort of algorithmic, like, content matching that's happening between the real world, which is complex, and there's all these different kind of signals and noise mixed together, and our brains, which were designed to filter that world. It's this intermediate layer that seems to really be accelerating, as you're saying, that I can go to lunch and watch TikTok for 25 minutes and come back with a completely different set of beliefs than I had before. And I guess crucially, the point is,
on a limited perspective.
On a very limited perspective. Yeah, like, literally, I just watched these 3 things, but because the algorithm is so well tuned to help make connections for my brain, I come back pretty convinced that this thing must be real.
That's right. The same perspective told to you 10 times in a row by 10 different people ingrains it in your head. You didn't hear 10 different perspectives because the algorithm figured out that you're interested in that one perspective, and you sat there for a while on it. So why not show more of it? Because it's going to reinforce, your time spent on site, which is all they really care about.
Well, and I'm glad you mentioned that, because the other thing I wanted to sort of tie this conversation to that I think is really interesting is, I'm sure AI is going to come up a few more times in our talk today, but this question about essentially what are we optimizing for is really interesting to me, because I think maybe if I was to put a slightly optimistic spin on this like Black Mirror conversation that we've been having, Frank, the I think the benefit in a strange way is we're getting to see how powerful this like algorithmically derived view of the world is, mostly as a function of trying to optimize for just engagement and keeping me on platform, right? And so one thing that I'm slightly optimistic about is we are getting a very good like preview or warning of how the world is going to work moving forward and how our perceptual filters are being modified. And the benefit is the objective of the people building the first generation of those filters is just engagement. Just stay plugged into this thing that we've built. So there isn't, and I think this is starting to change a little bit, but for the most part, there hasn't been this like larger nefarious purpose for the programming. It's literally just been, hey, stay plugged into this. And when I use Twitter, I have this experience a lot, right? Like they'll show me a picture of a dog falling off a speedboat, right? Like I'm going to slow down and watch that video, right? It's not, I don't think, trying to like convince me of some larger
it's why your
political
content
opinion.
and my content isn't read as much, because people are watching that dog and I'm watching that
That's
dog.
right.
I mean,
That's right. Yeah, I mean, like find me a human being of any age that's not going to slow down for a split second to watch a video of a dog falling off a speedboat. Like we're all going to watch that. But, in some ways that is a relatively innocent way of sort of hacking my attention. I think the thing I worry about, and it sounds like you do too, is when that attention hacking, when that ability to like sort of mess with our perceptual filters gets applied to different goals, when the algorithm is optimizing for something other than just engagement, that then starts to get into questions about decision making and beliefs and things that are potentially problematic.
Yeah. And it's a very important distinction to make. I mean, again, there are business people that are optimizing for business goals, and we know what that game looks like, and we know what they're doing and why they're doing it. These platforms, though, can really be wielded as weapons, though, and they're about information dissemination. It's about belief systems. There are a lot of things you can do if you believe that human beings can be programmed and that you know where they're going to be and, what the system of programming looks like. So there are nefarious people in the world that can use these platforms to do bad things. And, we see it happening on the political stage. It's been happening a lot over the past decade or so. But I think in one of the predictions that I had was about the stock market actually being broken, without realizing it. I think that's another example where there's information that's put out in the world that's being digested by, let's say, trading algorithms that are, out there with the ability to put buy and sell transactions out into the market. And if you have nefarious players that are deciding to put information out there that they know will be absorbed by bots or by algorithms, like you can use these platforms for evil as well as for good. Right. And unfortunately, like the people who treat doing evil as a career, whether it's financial fraud or it's political fraud, like they're actually pretty good at what they do. And it doesn't take very many people being good at manipulating the world, to need defenses to prevent manipulation. And then that gets into a whole world of like who gets to control, who sees what, when, what kind of friction do you put in place and defenses do you put in? Where is the source of truth actually coming from? It's very, very difficult when you go down that path, but you have to believe that, even if there are plenty of good people in the world that mean no harm, and we might have to tweak algorithms and how things work in order for the good to actually shine. If there are bad people out there, and there will always be bad people out there, they will think about these systems as weapons.
Yeah.
And, you always have to assume that they are around, assume they are smarter than you, assume that they are motivated, and, figure out how to defend against it.
Absolutely. One, that might factor into some of our predictions that we're going to make. So now that we've gotten a good base of really fascinating discussion on sort of society and human behavior, I want to build on that foundation with some updated predictions. So, as you referenced, last time we did this, the framing was this. 1 year predictions are stupid because it's really hard to say what's going to happen in a year. That's really not that much time. It also is subject to a lot of sort of variability or volatility. And so I think making 1 year predictions very stupid. That's one of the reasons I don't do them. However, I do believe that over longer time periods, say 10 years, you can make directionally useful guesses about what might happen based on trends, based on technologies, based on things that might seem sort of like sustainable right now, but might not be sustainable over a longer period of time. You referenced the prediction you made about the stock market sort of breaking or needing to have a new set of rules put in place based on everything that's been happening. So, Frank, I would like you to add to your corpus of predictions here at Fintech Takes. What are some things you've been thinking about that might make good kind of predictions over that time period?
So, one of the things I've been thinking very hard about, which dovetails in everything that we've been, talking about on this podcast, is that I actually think that traditional financial theory is broken.
Okay.
So the concept that you take a certain percentage of your paycheck and you just set it aside and you passively invest it in 60% stocks and 40% bonds, and this compounds over time so that you end up with a nest egg for retirement. I actually think if we were to run that math, based on people's real lives, not the theoretical textbook version of what you should do, but based on people's real lives, I think it doesn't work. I don't think it ends with the retirement that it is supposed to end with.
Yeah.
Right. So if traditional financial theory is broken, you can keep telling people it's the right thing to do. But at some point, if you realize that it's broken, it needs to be replaced by a completely different set of guidelines and a way of navigating your financial life that does end with a retirement that works. Right. So, that's the goal of financial theory, right? Is what do I do with my money and my earning years so that at some point I don't have to work, to the last day that I die in order to make sure I can pay my bills and put food on the table. So I think that is going to get rethought. And I'm actually personally spending a lot of time thinking about what that could be. As funny as it is, I'm spending time both with Claude and with Grok, going down some very deep rabbit holes about trying to figure out how you would replace this with something that's much more modern, understanding the inputs at a much more granular level. Things like, Social Security came about, 8 decades ago, something like that.
Yeah.
And since then, every single decade, people are living about a year and a half longer than they did before. Right. And people are now aging in an unhealthy way, not a healthy way. So the last years are more expensive than they were, back then. Understanding college and the cost of college, if you go down that path, understanding trades, understanding cost of living, understanding ability to save and inflation, all of this kind of weighs into what does it really mean, for how you put financial theory in place. And, I'm coming to conclusions that it needs to be much more dynamic. It needs to be much less generic.
Yep.
It needs to be adjusting real time based on, just the facts of life where things get in the way. And if you fall off the path, how do you get back on the path, which requires something very different? I think it's going to require a recognition that everything is about compounding, both the good and the bad. And unfortunately, traditional financial theory only thinks about the compounding of the good, right? So if I put money in stocks and bonds, this is how they will compound over time. But there's a lot of things that are bad that compound. Like if you build up too much debt early on in life, like not having the money to save, then, creates a negative drag on your entire future. So I think a new modern financial theory will include avoiding mistakes, as well as, because again, the compounding effect of those mistakes actually could be more profound than making a good decision.
Yeah.
But
Yeah. Yeah.
it's going to be dynamic. It's going to be constantly adjusting. I think it's going to require, let's call it AI again, but it's going to require some, personal agent or bot or however you want to think about it, personal financial advisor that understands all the decisions that you're making with some high frequency, if not in real time, and being able to guide you with the impact of those decisions on what your future is going to look like and be able to project that out. But again, I think we do need to blow up this, traditional way of thinking about, generic advice to people about how you save for retirement.
Yeah. No, that's a good one. It's interesting because I wonder how much of the advice that we've given historically, right? Like this sort of defined model that we landed on. I sometimes wonder how much of that is, you know, picking out the lowest common denominator based on the very real assumption that most people won't have the resources to sort of tack back and forth and adjust, right? And so it's kind of this idea that, like, if I can only tell you one thing that's like one guiding principle, what's the one thing I tell you? And I have to skinny it down to that one thing. I'm never going to get a chance to talk to you or give you advice at all ever again. I just can tell you one thing. What do I tell you? Well, all right, probably the sort of historical model for what we've told people is directionally true, at least in some senses. Like, these things do compound positively over time. You want to save enough money so that you have enough to cover retirement over these ages. Like, some of these rules are not bad necessarily, but I think, to your point, we sort of were operating on the assumption that the average consumer is not going to have that many opportunities to get like really great advice guiding their financial decision. They're not going to be able to afford a personal financial advisor that sits down with them every 6 months for the next 60 years. And technology can't replace any of those things. So we have to simplify it as much as possible and tell people, just do this one thing.
That's right.
And probably on average, it'll work out okay for you, maybe. And I think, as we've been talking about, one, the assumptions around that path and the economic dislocation that we're going through, probably it's harder now to give that one piece of advice that's going to work for a large number of people. But two, the other thing that's changed that I hear you talking about is the technology or the tools that we have should allow for a much more dynamic, ongoing conversation between that consumer and the thing that's giving them advice, so that they can tack back and forth. And college right now is probably not a great decision for me, but I might come back to do that 2 years from now. Oh, okay, well, we can just revisit that then. Like, the ability to get to a long-term good outcome while being able to dynamically shift around back and forth and get advice in each of those moments seems like something that we're unlocking from a technology perspective that would make that very different than how historically we've had to approach it.
Yeah, I mean, I love my financial advisors at JPM, but I don't talk to them that often. They don't know about the changes in my life unless I proactively let them know there are changes in my life. And if you think about people, early on in their careers, early on in their adulthood, like, there are a lot of things that are happening, like, in real time, that will compound over time, right? Do I get this apartment where I have roommates, or do I buy a house, right? Do I take this job in this location, or do I decide to go to a less expensive, geography and make some sacrifices there? If I take this vacation this year and it's going to take me 3 years to finance it, what does that really mean? So these are decisions that might seem to be small, and for a financial advisor, they might not know how to even ingest them to give different advice. But I think with the ability to project out into the future, the ability for artificial intelligence to play scenarios and understand the compounding effect of decisions, and viable alternatives, not generic alternatives that might or might not exist, but viable alternatives, I think is real. And I also think the ability for just natural language, just talking, not having to frame, everything by filling out forms and structuring it. Like, people can just talk. Right. And I think that is going to be a giant unlock, because it's not that intimidating if every time you're about to make a decision, you just say, hey, I'm thinking about making this decision. What do you think of it?
Yeah.
And you have, a sequential back and forth with someone as a conversation, right? And that someone is actually a super intelligence. And when I say super intelligence, like not through super intelligence, but you can think about it as like someone with 150 IQ that has the unlimited power of being able to look at information on the internet and, all of the books that have ever been written and like be able to digest it all and give you real feedback. So having this super intelligent 150 IQ personal agent that understands everything happening in your life because you just talk to it. Like it's not that far off.
The ambient idea of just being able to talk to something, I think, is the other thing that's really powerful here. Like I was playing around, I think it was with Grok maybe, but like it has the ability to just sort of listen passively. Like it can just sort of sit there and be sort of always on. And like that's going to take a while for people to sort of to grok the value of and be able to understand that. But I think that like that is so powerful because that's the thing that just like, unless you happen to be married to a certified financial planner and they're like embedded in your household listening to you talk while you're getting out of the shower, like unless you have that as your spouse, it's pretty difficult to approximate the value of having someone both qualified but also embedded in your life. And like with these agents, theoretically we'll be able to have both, which is, I think in some ways the combination of what's going to come out of that is powerful than having either one, right? Like I get good advice from my spouse, but she doesn't have, access to every book on investing ever written just sitting in her head. So like it's tough.
The other thing that I think is a prediction for the future is today we have financial products that are out in this giant financial supermarket. And there are lots of them that are out there that range from simple products to highly structured products. And when a financial advisor or you as an individual searches for solutions, right, you go out to that financial supermarket, you see a fraction of it, and you shop within that fraction to try to find the product that fits what you're looking to accomplish, right? So you might buy an indexed fund and it has a purpose in your financial plan. And then you might buy some bonds and they might serve a purpose in your financial plan. I think in this new world, these artificial intelligences that are going to be our own agents thinking about what we need are actually going to construct products and then say, let me construct the perfect product and then shop that product to a financial organization that will then create it and sell it to you. So, if you think about it as a giant puzzle that you're trying to put together, you either have to shop disparately for the pieces and then hope that they actually all fit together to create a picture, which is actually pretty hard if you think about it. Just happens to be lots of pieces out there so you can approximate what you're looking to accomplish. But if you want to have an exact puzzle put together, right, you can construct the puzzle piece that you're looking for through structured finance. And it could be your own agent that says, look, I think that you need, a bond that looks like X, Y, or Z. I think these are the companies that should be in a basket of bonds that will create this. Let's go construct this product and see if a financial institution will sell this to us, or we will construct it ourselves. So I think the puzzle is going to be assembled in a very different way, where you're going to have built to purpose financial products accomplishing very specific things in your financial plan, right? Instead of shopping in the general supermarket.
That is very interesting because the other thing that I think comes up a lot with this is this idea that there will be analogs to how some of this stuff works, but it only works at a scale that's not approachable for an average consumer, right? So what you just described about, hey, construct a product and then get someone to sell it to you, that's exactly how investment banking works, right? Like we already know what this looks like, right? Like structured finance where it's like, hey, this is what I need. These are the terms I'm interested in. This is what I'm looking for. Like in investment banking, we do that all the time. And you go to different banks and you sort of shop around and they're like, yep, I think we can make a market for you. And they figure it out. Yeah. But in some ways, investment banks are much more like market makers in the sense that they're responding to very structured demands or requirements by the people that they're serving or the companies they're serving. That's just not how retail banking has worked, only because of the inefficiencies in doing that at a very, very small scale. And you can think about like contracting, right? Like when you're doing stuff in like corporate finance or investment banking, there's lawyers involved that draft these incredibly long agreements with all of these different provisions, and then they make sure that all of those are upheld to. Like, all of that can be done with machines, which means that you can completely flip the model of how you think about building products versus shopping for products on its head. That's fascinating.
Yeah, I mean, imagine if there's a missing puzzle piece in your financial plan that says, I'm retiring in 7 years. I have, $1 million or $1.5 million that I want to put into a vehicle that gets 7% yield between now and that period of time with limited, downside. I need it tied to the stock market because that's the missing puzzle piece. And like, you can imagine constructing this and then putting it out and then saying, who wants this? Right.
And there's someone out there that does. I mean, that's the thing that's funny about these markets is like there always is someone who wants that. It's just a matchmaking problem of finding them.
That's right.
That is really, really interesting. So as always tends to happen, Frank, I figured we would go long with just a couple of these really interesting discussions. So in the interest of time, I will let you go after that one, but let's make this a recurring thing where you come and add to your list of long-term predictions, because I think those ones are really great. And as we've been talking about, it fits into this larger framework of how human behavior and how society is changing. So as always, thank you for your time, sir. This was very illuminating.
Oh, always happy to be back.
Thank you. Thank you for listening to this episode of Fintech Takes. Stay up to date with emerging companies and the latest fintech trends by subscribing wherever you get your podcasts. And if you love Fintech Takes, please tell a friend.